All right, what is a rental income loan? It's a very good question we have, and we'll be answering that today. So, a debt service loan is a debt service basically is the amount of money needed to service a mortgage or other type of loan, and the debt service is simply the cash required to make the payments on a loan. And the payments consist of both principal and interest. The debt service coverage ratio is the borrower's capacity to service or repay the annual debt payment based on the net operating income generated by the asset, aka the collateral, aka our subject property, if you will, the property you're buying. Debt service coverage ratio reveals if a real estate property is making enough money to cover the mortgage or not. So when a real estate investor applies for a new loan or refinances an existing mortgage, lenders evaluate the debt service coverage ratio as one indicator to calculate the maximum loan amount. And so on these loans, what it is that's the only thing we look at. We're not looking at your tax returns. We do look at your credit report, but it's very much somewhat of a no-doc loan because we're really looking at what does the property bring in. And if it's new construction, even we can do this. We just go off the appraisal and we use a certain percentage of income, rental income, calculated by the appraiser and what's going on in the marketplace currently. And we use that income to qualify the property. It's a beautiful loan. It's a beautiful concept. It works great. Now, there are a lot of reasons why this is such a phenomenal product for investors. If you're looking to get into the market of investing, etc., I'm going to review the top 5 reasons why a debt service coverage loan, a rental income property loan, an investor loan, whatever you want to call it, is a good idea. So reason number 1, personal income is not taken into account by a debt service coverage ratio loan. So what we look at, once again, is just the rental income versus what the mortgage is, and then we calculate it based on those numbers. Reason number 2, these have a much quicker application to close time. There's way less documentation to review. It's a very simple process. It's very straightforward. And so, again, we can close really quick on these transactions. Reason number 3 is you can actually buy multiple properties simultaneously with this program. I mean, you don't want to get too far over your head in investment properties, of course, but you can actually buy several properties at once with this program because we are simply looking at the property and the debt to income ratio. We're not looking at the entire borrower portfolio of what's going on. So it's a wonderful opportunity if you have multiple properties that you might be able to get a deal on, etc., that pop up. I mean, this is really a unique program to help you close on all those. Reason number 4, if you're looking to cash out an investment property, these actually allow for more cash than your conventional loans. The conventional loans typically will cap at around 75%. We can, in some cases, go up to an 85% loan to value. So you can get more cash out using a debt service coverage loan than a conventional loan in most cases, I will say. And number 5 is this is a great opportunity for both new investors and seasoned investors. So it is ideal opportunity for new investors would be number 5. But if you are a seasoned investor, this is a great opportunity as well. It really just lets you purchase a property with the funds necessary for the down payment. And again, we can go up to an 85% loan to value. That's just 15% down on an investment property. So again, as a novice investor, it's a really good opportunity to get your foot in the door. So that's it. I'm Garrick Wordmuller. I'm a mortgage broker, Fresh Home Loan Inc., independent mortgage brokers that work for the people. We've got a lot of really great loan products out there. And while we might see rates higher in the market, what that means is opportunities to buy because the market's softening. People are scared to get loans right now. They're scared to buy. So I think you make it in there and we're going to see, a long-term investment that's really going to come through for you. I do believe that in this market. So give me a call. We'll talk soon. Text, etc. Email, message me, comment below, subscribe. I appreciate you. Have a great day.